24/7. Fresh morning, fresh start, new topic. Let's start with the morning on a positive note. Today's topic for discussion is Altman Z score, the most difficult and the most horrifying topic of CAIIB. If Altman Z score comes in the exam, everyone is afraid of. But remember, this is the easiest topic, easiest, okay? So follow the video till the end, and before that, download Adda 24/7 app on your mobile. Also, join our officers at that YouTube channel, because in this app you will get all the notifications regarding updates, okay? Second, all the new video lectures plus live tests plus notes, everything in one go. So don't go here and there, okay? So let's begin with the topic Altman Z score. Then the schedule for today's session is, firstly we'll give you the meaning. What do you mean by this Altman Z score? Secondly, details of the Z score, means what does it actually consist of? What does it give? What is the significance of this? Okay, and last one, we'll solve one case study on the same topic. Okay, so let's move on. Here we are starting this crash course or selection batch on June 6. Join as fast as possible. More on that later. Use this code Y432 here. Whatever, 35 plus hours of ABM, BFM, mocks and ebooks, everything. Okay, I'll come to it later. Move on with the topic. Okay, without wasting the time. Here we don't have time to waste. Only we get half an hour roughly. Okay, so what is Altman Z score? A rating model combines financial ratios using reported accounting instruction and equity values for to forecast the probability of a company entering into bankruptcy within 12-month period. The model is known as Altman Z score. Means what? See this important points over here. Okay, financial ratios. This is related to financial ratios. Number one. Number two, reported accounting instruction. Reported accounting means whatever that company has reported. Now there lies a problem. If the company reports the wrong figures, then the Altman Z score will go wrong. But if the company reports the wrong figure, then it's a fraud. They'll get caught somewhere, definitely. Okay, so that's why wrong reporting is the biggest fraud in corporate world. Okay, and that cannot be done. That the CA, chartered accountant, gets into the problem. Okay, CA, CS, everyone, even the CEO, everyone gets into the problem. Okay, so this is second part. And reported equity values to forecast the probability of company entering into bankruptcy. Bankruptcy means what? Within 12 months. Means what? If you buy the stock of that company, then your stock value will be zero in some time, mostly 12 months. Okay, that's very important. If I am the investor, let's say I buy the stock of some XYZ company from share market, and if that Altman Z score predicts that the company will go into bankruptcy, and it actually goes into bankruptcy, then what happens? The value of my stock, suppose if I had brought that stock for 100 rupees, then that will become zero. So it's a huge loss for the investor. If I bought one stock, then 100. If I bought 1000 stocks, then 1 lakh rupees becomes zero. Okay, so that's why Altman Z score is very important. What does it tell you again? Okay, financial ratios, reported accounting instructions, equity values to forecast the probability of company going into bankruptcy within 12 months. Okay, now it was developed by whom? American finance professor Edward Altman. That's why its name is Altman. Okay, in 1968, as a measure of financial stability of the company. Because what happens? We have various ratio analysis. All that ratios, which turnover ratios, profitability ratios. What are the types of profitability ratios? P ratio, EPS, gross profit, net profit, overall profitability. All these 5-6 ratios over here. Turnover ratios, stock turnover, debtor days. Then we have some that capital adequacy ratios also, right? So that also. So going through all these ratios, one ratio or the other always conflicts each other. And a finance person or an investor, common investor like me and you can't go through all these ratios. Okay, so what happens? Altman designed a single score. Okay, that single score will give you the idea of all the things. Okay, that's why Altman Z score is very important for investor. Altman Z score has become widely used and trusted measure for financial distress. See here, whenever you are an investor, investing for a longer period, always go for Altman Z score to see that whether that company will survive or longer or no. Okay. Now we will come to the theory part. More details of this. The Altman Z score is the formula for determining whether the company, notably in the manufacturing space, is headed for bankruptcy. The formula takes into account profitability, leverage, liquidity, solvency and activity ratios. Remember, this Z score is mostly useful for manufacturing. Why? Because it has all those parts of inventory and all these things are involved. We'll see that later. Okay. Okay. So what does it take into account? Profitability, leverage, liquidity, solvency and activity ratios. Activity means that stock turnover, debtor turnover, all that. Solvency means solvency ratios, short term solvency, long term solvency, right? Short term means what? Current ratio, liquid ratio. Okay, what is the long term solvency? That capital adequacy and fixed asset ratio, right? So these ratios. Okay, liquidity, just now I told you earlier also, liquidity means how liquid somebody is. Yeah, we come to PE, EPS, profitability ratios also, okay, in that. So how reliable is the Altman Z score now? In its initial test, Altman Z score was found to be 72% accurate in predicting bankruptcy 2 years prior to the event. Means you can predict the bankruptcy of a company before 2 years. Now how good this is? If you are an auditor, if you are an investor, if you are a CEO, anyone, for anyone this is the best score, right? Isn't it? Because I can immediately tell the future of that company. So why isn't, and without going through all the 5, 10, 15, 20 ratios, okay? In subsequent years, over 31 years up to 1999, the model was found to be 80 to 90% accurate. Now if I am getting this 90% accuracy, then why should I go here and there? It's like going a one-stop shopping, right? That's why I said about Adda 24/7 also. It's a one-stop shopping. Why do you go here and there for all banking services or banking activities? Go to Adda 24/7 only. It's everywhere. Everything is over here only. Okay. So 80 to 90% accuracy in predicting the bankruptcy 1 year prior to the event. So before 1 year, it's 80 to 90% accurate. So why not to go for it, isn't it? Now what is this Altman Z score? Z score, this is the best Z score. It has 5 elements basically. A, B, C, D, E. Some books call it X1, X2, X3, X4 and X5. Okay, anything you can call it. But the numbers are important over here. Weightage. Okay, 1.2 into A plus 1.4 into B plus 3.3 into C plus 0.6 into D plus 1 into E. Okay, so these are the 5 ratios which are combined under Z score. So what is A? A equals to working capital upon total assets. Working capital. Now what is working capital? Working capital means working capital gap. How do you calculate working capital? I'll show you in the example. But can anyone write to me? Okay, now I'll give you the question. Find the net working capital. Write in the comments. What is net working capital? Write fast. Net working capital. Right. Write fast. Yes, I'm waiting. Correct. Current assets minus current liabilities, that is net working capital. Okay. And what is total assets? Current assets plus fixed assets, both. Okay. Remember, this total assets concept is very useful in Altman Z score. Out of 5 ratios, 4 are having this total assets. Here, total assets, total assets, total assets, total assets in the denominator. Only D is not having it. That's why this total assets concept is very clear. You should be very clear to you. Total assets include current plus fixed, both. Okay. So working capital, you got it. Everyone is typing. Yes, you are still typing. Why am I getting only 15 answers over here? Everyone should type fast. Okay. Working capital equals to current assets minus current liabilities. That is net working capital. What is gross working capital? Can anyone tell me? Type gross working capital. What is gross working capital? Everyone, fast, fast, fast. I want fast answers. I don't want your time to be wasted because you have to go to the bank, isn't it? So what is the gross working capital? Total current assets. Current assets are the gross working capital. What is net? Current assets minus current liabilities. B. B means 1.4 into B. Remember this figure 1.4 also. Retained earnings upon total assets. What are retained earnings? What is the other name for retained earnings? What is the other name? Type fast. What is the other name for retained earnings? I want everyone to answer. Be fast, okay? Other name for retained earnings is reserves and surplus. Correct. Some of you are clever, right? Why aren't others answering? You have cleared JAIIB, everyone. So why aren't others answering? Reserves and surplus, and mind it, you know it. It's not that you don't know. Only the point is we are afraid of writing the answers. I'll tell you what the problem is with our bankers is. We are afraid. Oh, what will others say? What will others comment if I go wrong? Nothing happens in this world. Go on commenting. If you want, if you feel you are right, you comment it. Others are not as clever as you think. Okay. So retained earnings means reserves and surplus. C. This, what is the figure for C? 3.3. Remember this 1.2, 1.4, 3.3. Then it becomes less again. 0.6 and 1. Okay. So 3.3 into C. What is C? Earnings before interest and tax. We call it EBIT. Okay. And then total assets. Earnings before interest and tax. Here there are two words in finance. Always you might be seeing. One is EBITDA, right? E B I T D A, EBITDA, right? We hear this word many times. So earnings before interest, taxation, depreciation and amortization. So DA first, when removed, we only get it EBIT. Okay. So that is useful over here, EBIT. From EBITDA, we subtract this depreciation. We subtract depreciation, then we subtract amortization. Okay, and then what we get is EBIT. Okay, remember this always. From, okay, I'll go forward also. From here, what will I debit? I'll debit the interest first. Interest. And then I'll debit again taxes, whichever I've paid the taxes. Okay, only paid taxes. And then what I get is NPAT. NPAT. And this NPAT is your net real income of the company, and this NPAT is distributed into dividends. Dividends, okay? Or there are two ways, either dividends or NPAT is kept as R&S, reserves and surplus. Or NPAT is kept as reserves and surplus, okay? So this is the way finance moves. EBITDA, then depreciation minus, amortization minus, we get EBIT, and this EBIT is useful in Altman Z score. From EBIT, if you subtract interest, then taxes. Remember, don't change the sequence. You can't deduct taxes first and then interest. First interest and then only taxes, okay? Here also depreciation first, then amortization, and then what we get is NPAT, net profit after tax, okay? So let's move on. Earnings before interest and tax upon total assets. Total assets remain the same, so that's why I'm not repeating it. D. What is the figure for D? 0.6. The weightage. Look at the weightage, okay? Market value of the equity upon total liabilities. Here, it is total liabilities over here. Liabilities means what? If it's a bank, then what are the liabilities of a bank? Tell me right fast. What are the liabilities of a bank? What are the liabilities? Fast. Saving is a liability, current is a liability, FD is a liability, everything is a liability. What are the assets? All the loans are assets, isn't it? So this is the liability, and market value of equity means value of one share into number of shares. Okay, simple. Okay, D done. Now E. Sales upon total assets. Again, see the weightage is 1 over here. Okay, so sales upon total assets. Sales we get it directly. What is sales? Sales is always net sales. What do you mean by net sales? Gross sales minus the expenses, okay? Or sales return also, minus sales return, okay? So net sales upon total assets. So this is totally the Altman Z score. If you combine this score, you will know whether the company is moving into bankruptcy or no. So how do you know whether this company is in bankruptcy or no? See this, a score below 1.8 means it's likely that the company is heading for bankruptcy, means very crisis situation. See here, I've made the table also here. Below 1.8, it's a crisis situation. Company is surely heading towards bankruptcy. We have to take drastic measures. Means the company has to take the drastic measures, otherwise it will definitely fall within 1 year. Okay, then while the companies having score 3 and above are not likely to go bankrupt, so 1.3 to 3 is a gray area. It's heading towards bankruptcy slowly and slowly. But 1.8, below 1.8, definitely. Above 3, safe. I can't say it's safe directly, but okay, safe. You can call it safe. Above 3, it's okay. The company is going good. Okay. Investors can use Altman Z score to determine whether they should buy or sell the stock if they are concerned about the company's underlying financial strength. Right. If I get this figure 1.8, 1.8 to 3 and Z, I'll definitely be easier for me, right, whether to invest in that stock or no, right? If somebody amongst you gets a position, let's say for a hypothetical situation, you can get, why not? You get a position of CEO of any company, then you check the Altman Z score, whether your salary will remain for after 5 years or no, right? Otherwise you will become CEO and that company will go down. So go for that Altman Z score, okay? So if that, again I'll repeat, if the Altman Z score is less than 1.8, it's a crisis situation. Company is surely heading towards bankruptcy. It doesn't mean that company can't be renewed or rehabilitated from here. We can definitely go for it. There are measures available. Okay. 1.8 to 3, it's a gray area, and company is heading towards bankruptcy slowly. Above 3, it's good. Okay. So let's move on for objectives. Before that, I'll again come back to our selection batch. Selection batch is starting on June 6, 6 a.m. in the morning. You get 35 plus hours of ABM BFM. Full portion is covered in this. Okay, for ABM and BFM, all the numericals, all the important theory questions like this Altman Z score. Okay, all the numericals, theory questions, all the objective questions. Whatever the repeated questions are, that is also covered in this class. Okay, so definitely go for it. I would tell you, otherwise you'll lose this. And mocks and ebooks, means mock tests, last minute preparation. These mock tests are very useful. You just follow our videos and go for this mock test. That's it. And that is available in that course material only. Recorded videos 24/7. If you lose any lecture, live class on any day, you can definitely go for that recorded session, isn't it? Unlimited doubts. You can solve any number of doubts with me, because I'll be conducting that course. So you can solve any number of doubts with me. Okay. June to July target exam is this coming exam. Okay. It's a short course. It will be completed within 1 month. Complete. Okay. All ABM, BFM and retail. So fast. You'll say how? Because I have done almost 17 to 18 batches up till now. Okay. This is my 18th batch. So I know what is repeated in the exams, what is called for in the exams, which questions do arise. I only stick to the topic which is required in exam. No extra knowledge. Okay. So let's move on. Let's solve the case study. So total assets given are 30 lakhs. Current assets 1 crore, what, 20 lakhs CM. Current liabilities 80 lakhs. Then liabilities, there's 50 lakhs. Reserves 10 lakhs. EBIT 70 lakhs. Sales 80 lakhs. Equity values 70 lakhs. Calculate the Z score. Now remember, important part over here, this CA and CL are useful only to find out the working capital. Working capital, what is working capital gap? Current assets minus current liabilities. Okay. So total assets over here are 120, and current assets are total assets are 30 over here, and current assets are 120. So there's a difference over here. But don't look at this in exam. Some questions can come like this. These two are useful for you only in case of working capital. Okay, current assets minus current liabilities. Now to match these figures, this can go to 10 extra. If you want, if we can go for this 10 extra, but don't go for it. This is only to give you the idea. What is working capital gap in this? 120 minus 80. Okay, you can cut 10 from here. Okay, then also it's okay. So it will match now. So 120 minus 80. So it is 40 lakhs. You can keep it as 40 lakhs. 40 lakhs. Okay, this is the working capital gap or working capital over here. Okay, so don't remove this zero now. For calculation purpose, we'll keep it as it is, whatever is given. Okay, yeah, we'll keep it whatever is given so that it becomes easier for us to understand, because this is just a sample case study for us. So working capital equals to 40 lakhs, liabilities 50, reserves 10 lakhs, EBIT 70 lakhs, sales 80 lakhs, equity 70 lakhs. Okay, calculate the Z score. What is the formula for Z score? 1.2 into, just now we saw that, 1.2 into A plus 1.4 into B plus 3.3 into C plus 0.6 D and 1 E. In exam, everything will be given to you. Even this won't be given to you. Directly they'll give you working capital 40 lakhs. Directly they'll give you that. Okay. So once you get that, you know, need not calculate all this current asset, current liabilities. Okay. Let's move on. So A, working capital upon total assets. Working capital is what? Current asset minus current liabilities. 120 minus 80. Okay. So that is 40 lakhs. So 40 lakhs upon total assets. What are the total assets given? 30 lakhs. Yeah. See this total. This figure is very important because it's useful in 4 ratios. Okay. So 40 upon 30, it's 1.33. Got this point, everyone? How did we find out the working capital? Current asset minus current liabilities, right? Current assets are given as 120, current liabilities 80. We'll remove these zeros now. Okay, enough further calculations. So it is only 40 lakhs. Okay, so 40 upon 30, 1.33. Got this, everyone? What does this ratio show? This ratio shows the working capital, means movement, turnover of that company. Okay, how much floating money does that company have? That is shown by A. B, retained earnings upon total assets. Retained earnings means reserves. What are the reserves given over here? Reserves 10 lakhs. Okay, this 10 lakhs. So let's move on. 10 lakhs. 10 lakhs upon 30 lakhs. We'll remove the zeros now. 10 upon 30, right? Because this is 30 lakhs. So 0.33. What does this figure show? What does B show you? Retained earnings upon total assets means how much are the reserves and surplus of that company? How much cushion does that company have? Cushion. Reserves and surplus is always the cushion. Cushion means what? If something happens tomorrow, how much can I fall back? How much can I reduce my cost? So that is the cushion. So that's always shown by R&S. Okay. Move on. C, EBIT, earnings before interest and tax upon total assets. So EBIT is given to you. Let's see. EBIT, it's already given, right? 70 lakhs. So 70 upon 30 again, isn't it? EBIT 70 upon 30. So what it is? 2.33. What does it show? EBIT upon total assets means what is my earnings, means net profit before interest and taxation. Why didn't we subtract this interest and taxation? Because remember, interest and taxation is a part of government regulatory or compulsory payment. Okay, and before this, whatever amount comes is my income actually. Actually, EBITDA is called as a core profit. Mean this is what I've earned from my business. After that, I've subtracted depreciation, amortization, and even those are a part of my business. But interest and taxation are for external agencies. So that's why EBIT is always taken over here. Okay. Next. D, market value of equity upon total liabilities. Market value of equity means it's already might have given over here in the problems here. What is equity value given? 70 lakhs. Okay. So 70 upon 30. Okay. So let's calculate 70 upon 50 liabilities. Okay. Total liabilities. How many are the total liabilities? See this 50 lakhs. So 70 upon 50. Okay. So 70 upon 50 is 1.4. Got this value? Now E. What does this show? But actually, market value of equity means what is my total stock value, share value in the market upon my total liabilities, upon my saving current, etc. Okay. Last one is sales upon total assets. Sales means what are my net sales upon total assets. What are my assets? So sales given is 80 lakhs over here. It's already given in this figure. Sales. See this 80 lakhs. Okay. So sales is given as 80 lakhs. Use this value 80 upon 30. So it becomes 2.66. Calculate this. Everyone should see here all the figures which I have shown over here. You should calculate it yourself. How many of you have calculated yourself? Tell me, type yes if you have calculated. Type yes. Because in the exam it will be you who will be answering, not me, isn't it? So 80 upon 30. What is the answer? 2.66. Has everyone got this answer? 2.66. Go on, type yes. Fast. Type yes. Yeah. Okay. Now Z. Everyone should do this calculation. Everyone. Okay. 1.2 into A plus 1.4 into B plus 3.3 into C plus 0.6 D plus 1 into E. So that is Z score. So calculated 1.2 into A. What is A? 1.33. Plus 1.4 into B. What is B? 0.33. Plus 3.3 into C. What is C? 2.33. Plus 0.6 into D. 1.44. Plus 1 into 2.66. Everyone should get this answer. Tell me how many of you are getting these answers. This, match this to this. Third, fourth, and this one is fifth. How many of you are getting this answer? 1.596. Type first. Everyone type for 1.596. Has everyone got this? 1.2 into 1.33, 1.596. Type yes if you have got it. Because I'll take the class for all these now. Because what happens, it's you who must answer this, not me. So has everyone got this answer? 1.596? Yes. Now you are typing 1.596, 1.596. Yes. 1.4 into 0.33. Has everyone got this answer? 0.462. Type yes. Type yes if you have got it. 14 3s are 42. Right? Roughly it is. You can directly get it from the tables also, isn't it? So type yes, fast. 3.3 into 2.33 is, are you getting this answer? 7.68. Two figures are also okay. 7.68. Type yes. Fast. Type yes. Yes, I'm waiting for your answers. Yes, you guys are typing. Many of you are typing now. 0.6 into 1.4. 0.84. Are you getting this answer? Fast. Yes. Okay, and last one is 2.66. Add them. What is the answer you are getting? Total, are you getting this? 13.24. Everyone should get this answer. 7 plus 1, 8 plus something, 2.66. Okay, I'll do it here again. Okay, 1.596. We'll do it here. Okay, solve it here only. Use a simple calci in exam. Never use this scientific calci. Okay, plus 1.596 plus 0.462. Let's see who does it faster, you or me. Plus 7.68. Only two figures I'll keep it. Plus 0.84 plus 2.66. So what are you getting? 13.23. Correct. So 13.23 is the rough answer. Roughly everyone is getting the same answer. 13.12 or something. Okay, that's okay. 13th figure is important. So what are you getting over here? Ultimate Z score is 13. So what was the criteria? Tell me. Below 1.8, serious. 1.8 to 3, okay. Above 3, best. Here it is 13. So the company is the safest. I can invest for a longer term in this company. So remember, this is a 5 marks case study for CAIIB, and be sure it will be there in exam. You can never have a CAIIB exam without this Ultimate Z score topic. Okay, so go for it. Again revise this video. Now many of you have complained to me, sir, you always tell us about the classes, but we don't know how to get the discounts. So I'll tell you how to get the discounts in this. See here, go for it. Click on this. Let's say I'll show you live over here. Okay. Yeah. Live Adda 24/7. See this. On Adda 24/7, when you click on the website, you get this web page. On this web page, you get this banking and insurance, JAIIB, CAIIB, SSC. Click on JAIIB, CAIIB. Once you click on JAIIB, CAIIB Mahapack, JAIIB and CAIIB. Click on CAIIB. Once you click on CAIIB, you'll get all the batches over here. See these batches, okay? In these batches, go for the selection batch. This is very important. This is the fast batch or crash course batch, okay? Click on that. Here you'll get all the details. See this, whatever details I've told you, same details you'll see over here. 35 plus hours of ABM BFM, mocks, ebooks, revision, 24/7, everything is over here. You can read this, okay? Even you can read the left side, it's given the same thing. Now fees 13,299. View offers, click on the offer. See what all offers are available. Enter coupon code. What is the coupon code I told you? Y432, right? This is the coupon code. Apply. See what happens. 13,299 minus 10 to 40. So you get it 3058. From 13,300 roughly to 3,000 roughly. 3,000 for your entire life career. Okay. You'll get roughly 1,300 increment after you clear CAIIB. Once you get 1,300 into 3 is 39. In third month, you are surplus. After third month, whatever you get is yours. Okay, 2 increments, not a joke. Okay, otherwise you'll have to spend 2 to 3 years for 2 increments. Okay, so go for it as fast as possible. Okay, so I'll stop over here. Again, tomorrow I'll be there with another topic, important topic for CAIIB. Go for it. Follow the full series and see you in the live classes as well on the June 6th. Okay, so I'll stop over here.